Keith Ellison. Thank you for coming by.
Hey everybody. So this is a very, very important session. So I'm going to get out of the way quickly because you got some awesome information. But I just want to say that if America is the land of opportunity, and opportunity is defined by access to education, then closing the university doors because of the inaccessibility to education based on debt means that we cannot claim to be the land of opportunity. This crisis strikes at the very heart of what this nation is about. And so it's critical that we do something about it. One of the most tangible things we can do about it is to make sure that student loans don't double on July 1. But in my opinion, that's the least we could do. You got a $1 trillion crisis, man. You've got to do something more than just make sure that student loans don't double. Let me just say this before I go sit down. If I didn't pay my student loan, that's my problem, right? My credit rating is going to get messed up. They're going to be coming after me. They might garnish my pay. But if thousands and thousands of people didn't pay, it'd be their problem. Think about that. Thank you.
Thank you, Congressman. So today, the two things that we'd like to really touch upon is one, what solutions are out there, and two, how progressives can help. So we've got some real great leaders in the movement. First, starting just to my right with Congresswoman Karen Bass, who's coming from California's 37th District. And most importantly, she recently introduced H.R. 1330, the Student Loan Fairness Act, which is a bill we're quite excited about, and we'll let her chat about that when it comes up. Then we also have Rohit Chopra from the Consumer Financial Protection Bureau. We have Chris Goff from the American Federation of Teachers, and then we have Tiffany Dena Loftin from USSA. So we'll kick it off first with Tiffany to hear from the student perspective.
Awesome. Hi everyone, how y'all feeling? Good. Okay, I appreciate we're all here. So again, my name is Tiffany Dena Loftin. I just want to thank Networks Nation. I want to thank Alex for this awesome panel and the amazing people that I'm sitting next to. This is going to be a great discussion. For those who don't know what the United States Student Association is, it is the country's oldest and largest student-run, student-led organization. We were founded in 1947, and we represent about 4 million students across the country. So student debt is definitely one of our issues because we're students. I graduated from the University of California, Santa Cruz back in 2011, and I graduated, go Dena slugs, and I graduated with $28,000 in student loan debt, all from federal student loans. They sold my loans to Great Lakes, so I'm having to deal with them right now, but I have all federal student loans. Part of the landscape that you all are all aware of course, we have about 8 days left until the interest rates double from 3.4% to 6.8% on Stafford federal loans. The same thing happened last year. We're all aware of that. But some of the healthy conversations we've been having here at Netroots have been things around long-term planning and long-term goal solution-oriented solutions to higher education, because when we talk about student loan debt, as we all know, it's not just, oh my gosh, everyone has student loan debt and it's $1.1 trillion. The issue is tuition keeps increasing. Students are being taken out of the shared governance package and policy of being able to contribute to higher education, policies, tuition increases, budget cuts, so on and so forth. We also have issues with access to higher education, so things like the TRIO program. I'm a TRIO alumni. The only reason why I was able to get into college is because the TRIO program called Opportunity Abroad actually was able to help me, Upward Bound was actually able to help me write a personal statement. My mom did not have a car, she's a single mother, and that program was able to take me to different community colleges around in the area for free. It was able to show me how to fill out the FAFSA, so on and so forth. So it's a range of things. We're not just talking about student loan debt and how do we stay in debt. It's how do we fix higher education and how do we make it affordable and accessible for everyone. And so the student agenda with USSA is we want education to be free. This is a Band-Aid issue to work on the interest rates piece, but we have longer-term goals. One of the long-term goals, of course, which shouldn't be that long-term, is the Student Loan Fairness Act presented by Representative Karen Bass back in March, which we completely endorsed 100% and worked really hard with her to write the legislation, and our students are lobbying really hard on that bill. In addition, folks are really excited about the Senator Warren bill, which we are as well, Bank on Students. The messaging is great, the outcome is great. But how do we talk about tuition and how do we talk about higher education being affordable and accessible? Some of the things that the United States Student Association has done, we've done all the typical tactics. Press conferences, phone calls, emails to Congress members. We had 300 students come to DC back in March earlier this year and lobby all of the legislators in person. And we train students how to do effective lobbying. We have, the tweet out thing that we do to Congress members. But some of the biggest things that are going to happen are not only on the federal side, but also on the private side. So back in February, the United States Student Association, I'll call it USSA because I'll stop saying the long name. USSA withdrew all of our partnership and our money from Wells Fargo. Wells Fargo is the second largest profiteer of student loan debt in the country. Thank you. And there are a lot of other youth organizations and a lot of other organizations like the Endowment Coalition who helped with that, with those resolutions and also helped with that organizing. We had a huge mic check at their the national headquarters in San Francisco. We also had a couple of actions last year with Sally Mae, both in their DC district office, but also at their national headquarters in Delaware. And recently, Sally Mae actually divided into 2 different organizations and elected a new CEO, John Remendi, and so the CEO previously, Albert Lord, stepped down, which is really awesome. And a lot of the information that we're going to be producing in the next couple of months is the result of our meeting that we're having in 4 days. So this, on the 24th, what is that, Tuesday, Wednesday? On the 24th, 20 of our students have a meeting with the new CEO of Sally Mae to talk about refinancing, renegotiating loans, their practices and how they're predatory and how we should make them not predatory. And that all came as a result, of course, working with the American Federation of Teachers. We had a huge action of about 300 students in Delaware to go in their shareholder meeting, demand to have a meeting with the CEO, and they actually gave it to us. So we're really excited for those type of movements and things that students are doing on the ground. But one of the big things that I'll be really interested in talking to you all about is like, what do we do outside of this? Like, we're doing all of the simple tactics that we have been trained to do that are really easy. We have short-term goals that are band-aids around higher education because, the Higher Education Act is coming up, reauthorization. We have the interest rates that are going to expire in 8 days. We have, a couple of things that are coming up that are deadlines. How do we talk about like education reform and the student responsibility to be a part of that conversation and like what it's going to actually take to move things, because students want to be involved. I had students this morning text me and say, Tiffany, what else can we do? We're calling our legislators, but what else can we do? And when we meet with legislators, of course, they're amazing and they say, make some more noise. But our effect to make more noise is usually dependent on the media, and they don't give a damn, right? So I think that part of the biggest conversation I want to have with you all is these things around what the Congress member mentioned earlier. How do we boycott some things? How do we organize strong actions on campuses? How do we work with teachers? How do we work with employees on the campus? How do we work with Congress to really push this issue? Because we can't continue to go down this line. Students are exhausted. And we turned out in the election season. We registered 135,000 students across the country, and that's 27% more than we did in 2008. So we're not lazy. We're not, we're doing the work. But I think that running in the circle is a little exhausting. And so picking you all with ideas around outside of those tactics will be a really interesting and amazing conversation. So please check us out on our website, usstudents.org, and you can follow us on Twitter at usstudents. Thank you.
Thanks so much, Tiffany. Chris.
Hi. How y'all doing? Post lunch food coma? Thank you, Alex, for putting the panel together, and for BFA, for doing all the work that they do. Thank you for my co-panelists. This is really kind of exciting to be up here. To solve the problem of student debt, we actually have to talk about the problem. And right now, there's a focus on the interest rate fight, and it's an important fight to have, but that's really the conversation we're having about that. Is how much student debt should people have, rather than why are people going into massive amounts of debt in the first place. So we need to actually sit down and why is this happening? So we need to think about some things. First of all, treating it as an individual problem. Student loan debt does not quadruple in 10 years because there's a mass outbreak of irresponsibility among young people. This is a structural problem. And then, the really thing that drives me crazy is when you have people like, I went to college back in 1962 and I worked my way through and didn't have any debt. And you're just like, well, in 1962. States invested in their higher education system. There were actual jobs for young people to take in the summer that could pay them to go through. This is completely different. So we need to acknowledge that it's not 1962 anymore. Debt is driven by the exploding cost of higher education, and that's driven by states disinvesting in higher education. In the 1970s, many public higher education institutions were funded, had 50% of their funding coming from the states. And now you look around the country and institutions are getting about 10% of their funding from states, and it's dropping. They like to, when they talk about having fights in state legislatures, they pit K-12 and higher ed against each other. It's a problem. The consequence of that is tuition keeps skyrocketing. But tuition doesn't cover the skyrocketing tuition, doesn't cover the shortfalls in institutional budgets. And so we really need to look at the state and disinvest. We can't solve this without looking at what's going on in state legislatures. We also need to talk about higher education being a public good. Kind of the consequence of individualizing student loan debt is we also individualize the benefits of higher education. People think you go to higher education to get a job. There's plenty of data that shows that higher education benefits whole communities. Increased volunteerism, increased participation, better health outcomes. It's good for communities when people have college degrees. So we need to make sure that education, higher education is used for public good for everyone. We also need to face the fact that the way we fund higher education is completely and 100% irrational. It doesn't make any sense for every young person in this country to be told you need to go to college if you're going to succeed in life. It makes no sense to have a very ambitious goal to have 60% of Americans with a college degree by the year 2020, and then you have to pay through the nose for it or go into indentured to be able to get that education. A system of financing higher education that relies on debt is it's immoral, it's wrong, and it's not going to do anything for people. Finally, we also need to realize this isn't just a student problem. 39 million people, young people who are going to be taking on loans, people on Social Security who are paying off student loans, parents who co-sign their loans for their children. And then the ripple effect that I think Rohit will talk about, the impact on the economy. This is everyone's problem. And it's not just limited to educational loans, right? People take out second mortgages on their house to pay for their child's education. They're putting their college education on credit cards. So it's bigger than just federal loans, private student loans. It's a civil rights issue. It's a feminist issue. This is skyrocketing or cost of higher education, primarily in the access on people of color who can't go to college, people who most benefit from it. Single moms can't go to college. So this is something that we need to be talking about. Veterans that are preyed upon by for-profit corporations, for-profit educational institutions. The pool of people who are affected by this problem is huge, and we need to be finding ways to be talking to these people about the problem and getting them engaged. So where do we need to go? So I'm working with a lot of people in this room, really incredible people who are taking on different parts of this problem. And when we talk about kind of the work that we're doing, we like to talk about buckets. It's 3 buckets of work. First of them is we need to do something right now about the $1 trillion people have in educational debt. There needs to be some sort of refinancing options for people. We need to restore bankruptcy protections to federal student loans. We need to give people a hand up. Second, we need to make sure that a quality higher education is affordable and accessible to everyone. And I throw quality in there specifically because we are rapidly having a 2-tier public higher education system where people who can pay or who are willing to take on the debt can go for your traditional college experience. And then for other people who maybe can't afford it, we're relying on a pool of labor, people with PhDs who are earning $2,000 a class, shopping from institution to institution, trying to dump people into online courses that are not necessarily the most effective educational tools, where we need to make sure that everyone has access to the best education possible, and that education needs to be affordable. We need to reinvest in our public higher education system. And finally, we need to look at the role of how Wall Street interfaces with higher education. We need to figure out what the skim is for financial institutions with every education dollar. Not only are they issuing loans, but for example, Sallie Mae has contracts with higher education institutions to process the student loans. So they give the loan out, get the interest on it, they get another cut when the when the college processes them. In some places, Sallie Mae gives student IDs that are debit cards, and they dispense student aid through a debit card that has a financial transaction fee attached to it. And so to get your Pell Grant, to get your student loan out and to be able to spend it, you have to swipe the card and get salary $3 cover, whatever it is to do that. And so we really need to examine that, make education dollars about going to education, going to instruction. It's a big task. I have to depress myself when I talk about this. But it's like I said, it affects everyone. And so we need to start thinking about how we engage all these groups of people. I'm really excited because over the last couple of years, we've really made, at the American Federation of Teachers, an effort to work more with student groups. And the payoff for this is just huge, and it's growing, and it's really exciting. They like to put faculty and students against each other. They'll tell faculty, you don't get raises, otherwise we'd have to jack up tuition. They tell the students, oh, we're jacking up your tuition because the faculty wanted a raise. And it doesn't make sense. There needs to be a unified voice about the importance of public education. We need to really talk about how unconscionable it is that there's $1 trillion in debt in this country, and that people are profiting off something that everybody in this country should have access to, needs access to. So I'll leave it there.
Great, thanks so much, Chris. And Rohit.
Thanks, Alex. And thanks for having me. My name is Rohit Chopra. I work at the Consumer Financial Protection Bureau, which was established as part of the Dodd-Frank Act. And I'm not an education expert, but I spend a lot of my time speaking with members of Congress and others about how do we fix this problem. And one of the, even though I'm not an education expert, I would say that, you know, when you're caught in a ditch, stop digging is the first thing. Because if we keep gathering more and more and more debt, that's obviously a problem. And I think there's conversations that both Tiffany and Chris have talked about how to prevent this going forward and how to stop, you know, gathering up another $1 trillion. But I think we also need to think about this issue in a slightly different way, about how the run-up in student loan debt is really an aftershock of the financial crisis earthquake. And in the financial crisis, what we saw is plummeting home values, higher unemployment, people's 401ks lost value, states cut aid to higher education. All of that meant more tuition, but not only more tuition, cost shifted from parents to their children. And that just meant a lot more debt. We haven't deeply thought about what is that impact going to be on the financial system and the economy. So one of the things that I'm very concerned about is the trends related to home ownership and household formation. So in 2011, there were 2 million more young adults living with their parents compared to 2007. And I don't really believe the media narrative that this is people wanting to nest and be closer to each other. I think it's right. I think it's that more and more people aren't able to get jobs that service an increasing amount of student loan debt. And first-time home buyers, the National Association of Realtors has told me, the National Association of Home Builders, that first-time home buyers aren't in the market. And when first-time home buyers aren't in the market, that means people who are trying to trade up or sell their home, they can't sell. And so all of a sudden, the impacts on the economy become much greater. Every time someone is forced not to be able to live on their own, that means $145,000 less in economic impact. And so if some of those 2 million people, just a third of those 2 million people who are living at home could move out, that's many, many billions of dollars of delayed economic impact. And think about retirement security. You know, so many people young people are unable to contribute to their 401k or even to get their employer match. And a lot of it, people want to say, oh, young people are irresponsible, they're spending it on coffee. Well, the data doesn't actually seem to show that. What the data shows is that real wages for college graduates, everyone talks about the growing college wage premium, right? The difference between how much a college graduate will make over her lifetime versus a non-college graduate. But that growing college wage premium is almost entirely explained by falling wages for non-college graduates. And on a real basis, wages for college graduates have actually declined slightly, even before the financial crisis. So what you have is this mixture and this great irony that it's more important than ever to go to college, but it's actually, when you take on this much amount of debt, much more risky. So we are caught in this situation where people have to pay out a lot of their income in servicing their debt at a young age. So it's not just housing, it's also maybe changing how people think about starting small businesses or being entrepreneurs. They just can't make the cash flow to be able to take that kind of risk. This is actually, I think, a huge threat to America's small towns and rural areas. You know, there is a lot of, this might sound silly to some of you, but one profession that is very critical for rural areas are veterinarians, who have very, very high levels of student debt. It's one profession that's pretty shocking. But instead of being able to make sure that livestock is not getting diseases or that our food supply is looked after, they are forced to work in much more lucrative areas. Maybe they're doing, I don't know, plastic surgery on puppies or something, where they're not able to actually do critical professions in key jobs. You know, and it doesn't extend to that. Health professionals, so many of them, there's a huge primary care shortage. But if doctors have so much debt, they often will need to choose to specialize or not go to underserved areas. Teachers, for when they don't have the ability to comfortably service their debt, that means they have to go to more lucrative school districts or leave the profession altogether. And so we need to think about this domino effect of student debt and what that means not just for borrowers, but really for the entire economy and society. Now, as a bank regulator, we have to also make sure that financial institutions are playing by the rules. The Consumer Financial Protection Bureau has taken a very keen interest in student loan debt collection, in student loan servicing. Some of those companies that make sure that we don't see a repeat of what happened in the mortgage market, where people were underwater, they wanted to stay in their homes, they wanted to make a deal which would be good for them and the bank, but they saw a runaround, they saw conflicting answers from one person to the next. And I don't know if many of you know this, but there was illegal foreclosures on certain active duty service members who were deployed, which is a violation of the Service Members Civil Relief Act. And in a report that I published a few months ago, we talked about some of the issues that active duty service members who are also guaranteed rights on their student loans, how they too are getting the runaround from servicers. This is very concerning. We have to make sure the law is being followed, but we also need to make sure that we know how to get out of the ditch. The $1 trillion of people, what are we going to do with that, and how are we going to make sure that a generation of people is able to get out? You know, the Federal Reserve has gone through unprecedented policies to lower interest rates. But those lower interest rates where corporations and homeowners have been able to refinance, that same benefit has not accrued to student loan borrowers. In 2008, there was extraordinary interventions through the Tarp Program, through a program to help more student loans get originated. Many creative solutions which allowed financial institutions to borrow at very, very low rates. And no matter what you think of those programs, they did allow cheap borrowing. And so it raises the question as to, will we use that sort of same creative solutions to make sure that today's student loan borrowers are able to manage their payments, get out of debt, and really be part of economic growth again.
That's a lot to think about. Well, first of all, let me say that it's really a pleasure to be here in general, but particularly a pleasure to be on this panel, because you guys are doing absolutely amazing work. I mean, you just kind of calmly said 137,000 voters were registered, and going to a shareholders meeting. I mean, that's really impactful stuff. And the idea of not separating the teachers from the students, I think, is really critical. And your point about public investment in state schools, and I certainly remember that very well when I was in the state legislature and we went through our crisis. So I think that's a real critical point. And then your points about the impact, in the economy and how short-sighted what we're going through right now is in terms of the long-term impact. The idea that there's a generation who has done everything that was asked of them, going to school, doing everything, and then you're not able, one, to get work right away, so this whole phenomena has developed, which you guys really need to recognize as a new phenomena that didn't happen before. And that's the fact that you guys graduate college and then you work for free. Now, certain professions required you to do that, like my background's in the medical field, and it's just understood that you work for free for a while. Now, everybody works for free for a while. It's called an internship. And you do that for a while, and you hope you get hired at where you did your internship. And those are things that I think is important to recognize, that these are changes in our country. This did not exist before. To me, this whole issue is really a moral issue. Because I happen to believe that, we do live in the richest country on the planet in the history of the world. And I don't understand why we can't provide health care to everyone. It should be a right. And I think education should be a right as well. And so to me, it's really an issue that I plan to stay on every day that I'm in Congress. To me, it's a long-term issue because we really do need to look at a whole number of issues. We need to look at how much education costs. I was watching the news the other day, and one of the things they're doing at private colleges is making them really high-end. Like they were showing this one college, the University of San Diego. And they have this almost hotel, like that's across the street, that they call a dorm. It has a pool and a spa and this and that. And so, on top of your $40,000 that you pay for tuition, you can go across the street and live in this luxurious, housing. And, that's fine and dandy for somebody that can write a check to do that. But all of us know good and well that a large number of the students that are living like that are taking on tons and tons of debt. And anytime the President of the United States and the First Lady say that they just finished paying off their student loans, I mean, you remember that. When the President was elected, I think it was when he became Senator, he was able to pay them off. But the only reason he was able to pay off his student loans was because of his book deals. It most certainly wasn't because of the salary he was making as Senator, but it took his book deals. So anytime you have that level that is impacted by it. I think the good news about that is that I know he feels passionately about this as well because it personally, impacted him. But there is so much that we have to do, and I think it fits in, frankly, to the larger narrative of the debate that we're having in our country, and I was able to hear part of what Leader Pelosi was talking about, but the ideological debate that goes on in Washington every day when you hear people say there's the makers and the takers, when we just finished going through the Farm Bill, where the Farm Bill wasn't passed because the right wing didn't feel it was right, it was far enough to the right. They were mad that the cuts in food stamps weren't deep enough. They put forward legislation that was going to require the surveillance of people on food stamps so we could see what they were eating. They needed to be drug tested, and we also needed to make sure they had work requirements. At the same time, Leader Pelosi is talking about the trillions of dollars that have been outsourced in the intelligence industry. And my point is that this issue, and I always think it's important to connect the dots, it fits into the larger narrative of the ideological divide in our country right now. Which direction are we going to go in? So the bill that I have, which I believe Tiffany described, a little bit, just briefly about it, it creates a 10-10 standard for student loan repayment. And so what that means is that 10% of your discretionary income, if you pay that back for 10 years, then the rest of your loan would be forgiven up to $45,000. Frankly, it also permanently caps the interest rates at 3.4%, and it allows some private loans to be converted into federal direct loans, and it suspends the interest rates while borrowers are unemployed, and it rewards graduates for entering into public service. So the reason why the interest rate came in is that I had a group of young folks over my house. It was probably about 30 or 40 people, and I was asking them what they thought I should do, legislatively and on this issue, and they told me about how when you're unemployed, you can have a deferment so that you don't have to pay back the loan, but the interest rate keeps accumulating. Mm-hmm. And so I did that bill last year, and then when Hanson Clark didn't come back to Congress because he did this bill before, he asked me if I would take it on. I really believe it needs to be, this is fine, and I'm going to work, to get this done, but I think it needs to be so much more. I think that it should be beyond $45,000, frankly. And I also think that if we want people to go into professions like teaching and all, then, the loans should be forgiven. So, a step at a time. The incremental change, does make you crazy sometimes, but, it's kind of important to take those first steps while you're fighting for much bigger things. Raising the question of the cost of education, period. Really pushing for public service. We want better teachers. We want people to go into professions like that. If we're going to expand healthcare to 30 million people, who's going to provide the healthcare? So, to me, there's a lot of reasons why, or a lot of ways you can direct people into public service, but people need to have the direct benefit of having their loans forgiven. So I see this as a first step. I'm an organizer at heart, and so I always believe that it's the organizing and the activism that really makes the day. And so one thing that I would say, and Tiffany, I know that we've talked about this before, I think it's very important when you are putting pressure on Congress that you strategically target that pressure. And so, it's amazing, even though I know that more than 50% of the House of Representatives are millionaires, and that's part of the problem. There's a number of them that aren't. And even the ones that are, they do represent a whole lot of poor people. The thing about it is that the folks in those districts need to rise up. And so the way you have done your work, which I think is so brilliant, and the fact that we're at Netroots and there's so much technology that can be used in the organizing, strategically targeting those members who come from districts in the South where there's lots of poor folks, or in the Midwest where there's lots of poor folks, and targeting them and putting the pressure on them from their constituents so that this becomes completely uncomfortable, and organizing the parents along with the students, because sometimes, even though I think that this is wrong, sometimes students are not viewed as consistent voters because, folks might be moving a lot, not really clear, but the parents are staying there. And so raising this, as an issue. Then the other whole thing that I think needs to be addressed, I don't quite know how to do this, but I'm just absolutely appalled by it. And that is when you do get behind, the way they absolutely harass you to death. And they harass you beyond means. And I think that needs to be caught under control. And I think that I haven't heard a lot of outcry around that. The harassment that people get, the phone calls, the amount of your income that you're paying in loans. The industry needs to be brought under control. They shouldn't be allowed to act like loan sharks, which is what I feel that they do. So anyway, for me, this is a long-term issue. In trying to get folks to be involved, and this is where working with USSA and the other organizations on this, people have been great. We're asking people to sign this as a citizen co-sponsor, and to give us your name, email, to let us know if you have debt, how much it is. I think it's important that you not let up the pressure 1 minute. We are days away from the deadline, But the issues that we were dealing with this week in Congress was immigration reform and the Farm Bill. This issue was nowhere on the radar. And so I think that's why, even days away from the deadline, you know, we need to do everything we can to keep the pressure on. So thank you very much for all of it.
And then just as a brief note, with the ask for becoming a citizen co-sponsor, I see on your website, bass.house.gov, you can actually become a citizen co-sponsor there, it looks like, at /bill/student-loan-fairness act. So everybody here should go add their name to that. And then also, while we have a digital ask, we at DFA put together a really great infographic on the economic impact of student loan debt that talk a lot about what Rohit mentioned, and then a lot of other really great organizations have put out some fantastic data that's quite surprising. So please check that out at bit.ly/bankonedu and give that a share as well. So now for the last little bit of the panel, we really want to open it up and have a discussion. So any questions that folks have, just raise your hand. If you can speak loudly, feel free to ask from there or come on up. So who has some questions?
What was it, link for Karen Bass again?
It was bass.house.gov/bill/student-loan-fairness. Just making sure. Yes, in the back.
Hey, what's happening? My name's Scott Ross, and I run an organization called One Wisconsin Now and One Wisconsin Institute. And I want to just let something that Rohit said. One of the things that Rohit said, we did a nationwide survey of 62,000 people where we were able, through an anonymous link, for you to tell us the most personal details of your financial history, including car purchasing, home ownership, your amount of debt, your length of debt, that sort of thing. And I just want to give you guys a couple of the findings because I think that they are indeed terrifying. It turns out the average length for repayment on those reporting student loan debt is 21 years. It's, and I bring that as bittersweet news. I am one of the lucky ones because last week on my 44th birthday, I made the final payment on my student loan debt. But what our findings show that there is substantial harm done to the economy on home ownership and on new car purchasing. Those two embodiments of what it is to be middle class in the United States of America. And I just want to read these, and these are on our website at onewisconsinnow.org if you want to check them out. Again, it's a survey of 62,000 people all across the country. Rates of home ownership were 36% lower among individuals still paying on student loan versus those who have already paid off a loan across all income levels, literally across all income levels. If you have a student loan debt, you're better live at home than you are to own your own home. And then with new car purchasing, it was something like if you're paying off a student loan debt, 63% of those people purchase used vehicles instead of a new vehicle, which is, of course, problematic for our friends in the auto industry who bank on new car purchasing. So I want to thank all of you guys for the hard work that you're doing on that. And I just want to share this piece of data.
Thank you very much. Yes.
Yeah, thanks for putting this together and being part of the panel. It's great. So I'm really into this idea of going after banks on some of this stuff, and the idea of a financial transaction tax, which I know is like kind of out there. But there's the securitized debt market, right, which is probably pretty big. And I wonder if you guys could talk about the role that that plays in cost and what it might look like to go after that piece of Wall Street's role in the crisis.
So, for some of you who may know that after 2010, there is no longer, private financial institutions no longer originate federal student loans. So it's now all directly by the Department of Education. But obviously the capital markets play a big role in supporting the origination of private student loans, but they also play a role in the financing, often tax-free financing from colleges and universities. What I had mentioned before, and those of you who should maybe think a little bit about this, in the TARP program, there was a program established by Treasury and the Fed called TALF, the Term Asset-Backed Securities Loan Facility. And what it did is it allowed very cheap financing for buyers of asset-backed securities, but it included private student loans. So many of those, the government actually helped revive that market and originate many loans which people have a very difficult time refinancing, modifying those loans. So while there isn't that much securitization activity now, there's no question that there was a role that the government played to jumpstart that, and it seems to not have allowed borrowers to help repay. It seems to mostly assist financial institutions.
Yes.
Kind of a follow-up on the financial side. What effects do you see slabs having on the student debt market as a whole?
Not as much anymore because of the
Because of
direct
that.
loan program.
Okay.
Hi, thanks so much for the panel, by the way. This is such an important issue, and it's great to see organizers on the panel, too. I have to express a little skepticism about, sorry, I'm still sore from the karaoke. I'm a little skeptical about a legislative path to victory on here, since if we roll the clock back a few years, we couldn't get FCA, we couldn't get the public option, we couldn't jail the bankers. Taking on Wall Street in such a strong way, taking on Sallie Mae, it's going to, I think, take a lot of grassroots action, at the very least in the beginning. One of the most inspiring examples has been the student movement in Quebec, which has just bowled me over in terms of what they've been able to do. Clearly, it's a very different situation in a lot of different ways, but I'd love to know what the folks on the panel think are some of the more innovative things we've learned in the past few years that we can do differently as student and youth and teacher movements going forward, things that we haven't tried yet.
Well, I want to respond to part of it, though, in terms of you being skeptical about the legislative pathway. You're absolutely right. But to me, I don't think that you don't do that.
Right.
You know what I mean? Because you have to hold their feet to the fire. And this has to continue to be an issue. Because legislative is just a strategy. And I think it's important that that strategy be there. You pound away at this for a long time, and eventually, when the outside is large enough and it just becomes ridiculous, like Leader Pelosi was giving the example of the Violence Against Women Act, when it becomes an absolute embarrassment, then that's when you see legislative bodies move, but you don't want to be silent.
Good question. And I actually, just 2 weeks ago, was in Canada. And I was in Ottawa working with the Canadian Federation of Students. So they are basically my parallel, and I worked with my president, Adam Awad, who was there, to talk about the issue of student loan debt. They actually flew me out and was like, we want to know what's going on with student loan debt in America. And I was like, well, it's kind of different from what y'all are going through. So tuition in Newfoundland, for example, if y'all know I just learned all of this. So Newfoundland in Canada, the tuition right there is completely free for students. In Quebec, it's the most expensive out of all the provinces in Canada. It's about $7,000 a year. $7,000 a year. Their student loan debt problem is completely different from how we operate on our and how America, like politics and student government works, especially with Parliament and how it works with the Queen and her chief of staff, and it's completely different. But I think this question, I don't want to compare it because I can't. But what I do want to talk about is this notion of how do we do actions that are similar to movements that we've seen in other parts of the world, which is a very important and inspiring question. The Mexican Student Association also came and worked with us, and they came and talked to us, and we had a great conversation, and of course there were language barriers, but we had a really great conversation around what movements look like and how we start them, because we often want to compare with this urge, right, to the civil rights era and the war and young people getting involved in all these actions, doing all these really great things. I don't think we're too far from there. We have to respond differently because our issues are not the same, our capacity is not the same, and the young people that we work with right now are not the same. Like for example, Representative Karen Bass just said there are people who have to do legislation stuff because it's an important piece of the puzzle, right? There are going to be people like my mom who works 4 jobs and is a single mother who's paying a rent right now for $1,500 in a bedroom apartment, and she has 3 kids, one who's in DC, one who's in the Army in North Carolina, and one who has been missing for 4 years. She is not able to go out to a rally in Los Angeles or talk to one of her representatives in California and go to a town hall. She doesn't have the time, she doesn't have a car, she can't do that. And there's certain information and there's certain tactics and lifestyles that people have, right, to be able to talk about communities of color, and low-income people, students, the elderly, all these people who have student loan debt. Part of what I'm hoping, especially at Netroots, and especially since I've been doing my organizing for about 5 years now and through college and things, is we are gathering and base building so much. And I don't think that we yet have considered the fact that all of this base building, all of these trainings, all of this outreach that we're doing could actually be mushed. I'm in my head, right? This makes sense. I'm mushing this all together and thinking, how can we do a long-term plan that involves everybody? Quebec is a province. It's like a state. Imagine what happened in Wisconsin. That's what Quebec was able to do. But from California to New York to Florida to Tennessee to North and South Dakota, we can't do that. This country is way too big, and our conference that we do once a year in Washington, D.C., where we say everybody come from across the country and lobby with us, people don't have the resources to be able to do that. They can't fly students out to go do that. And oftentimes, which is what's happening right now, there's legislators and governors who are destroying the possibility of students being able to organize in the first place. Governor Brewer just signed a bill 2 months ago saying that the Arizona Student Association would be completely destroyed. And I need to tell you about that later. And then also the budget committee in Wisconsin, right, made it so that the mandatory refundable fee is no longer part of their budget and destroying United Council of Wisconsin students, right? I just got an email 2 minutes ago, 2 hours ago, from one of my students in New Jersey who said the same thing was happening in Michigan. So it's not only like young people are doing the work. We're excited, right? We're not being lazy. We're working hard. We want to see this giant movement, which, to be honest with you, I don't even know what that looks like literally, right? Does that mean 1,000 million people come to DC in March? Does that mean we all boycott school? Does that mean we stop paying back our loans and make it purposeful? What does that look like, or what does that mean? But I think it also means that all these opportunities and all these organizations that are in this room, every person here who goes to school, who has been to school and knows somebody in school, we take advantage of all of those names and those phone numbers and those emails, so when the moment does come, we can figure out, we know what to do with it, right? We need to recruit, and this country is so big, and there are so many different divisions of power that we need to level, right? There's campus level, statewide level, federal level. There's so many different levels of that, and there are also different roles that people have to play. So we have to do the legislative stuff. There are going to be people who want to do direct action all the time, right? And then there's going to be people who actually want to do the strategy and the training and the planning, right, of those pieces. And some folks who are going to be able just to follow along. And we don't need everybody to do everything, but we do need people to get involved. And we need to take advantage of this opportunity that we have now. So I don't know how many people here at Netroots. There's 37,000 people here. We should all figure out what we're going to do. We could have had a big action here and fix something, this weekend.
Just one quick comment on this. I'm sorry, Chris.
Okay.
I think it's also important for you to know that it's not just about students. When I came to Congresswoman Bass's district leading a town hall last year or something, and there was a line of parents who were so legitimately worried about the fact that they felt they had failed by not being able to provide, the full education. They were taking second mortgages, they were using credit cards, and they were upset that why was their auto loan or their mortgage so much cheaper than their student loan. And being able to think of this not just as something facing students, but I hear from realtors, from home builders, from hospitals, to farming groups. This is not something that's a youth issue. It really does impact so many people. So it's important to think about that.
I want to say something too. It is really important to support student organizing and student organizations and to treat young people as partners. I mean, as a labor unionist, I've seen faculty unions go to students and say, hey, come out for a contract, and then when the students need them, they disappear. Partners have a real relationship, support each other. And there's so much stuff that can be done on campuses in terms of making sure that students have an institutional voice in their institutions, that they can demand the quality education they want. Making sure that there's student and faculty and staff representation on university boards of regents. Okay? So it's incumbent upon us in our organizations. I'm really proud of the work that we do with USSA in supporting them. I know a lot of other labor unions are taking on this work, but the students need us. They're under attack right now. What's happening in Wisconsin is the same thing, same attacks, same playbook that they did with it's the same damn thing. We need to support each other. We need to have real partnerships, and that's going to build a movement and make that happen.
You know, I wanted to raise another issue that I think should be a pressure point of organizing, and that is the fact that the federal government does make money off of the student loans. And so I know that some of that money goes into Pell Grants, but I also think some of it should go into other things. But I actually wanted to ask the question, because one of the things in Congress, I'm also a member of the Congressional Black Caucus, and we have historically black colleges and universities around the country have been really badly impacted by the Parent Plus loan.
Yep.
And I wanted to know if anybody here is impacted, and I don't understand it completely, but it's something like if your parents have credit issues, they have nothing to do with you. That your student loan can be canceled. I mean, there's a couple of HBCUs, historically black colleges, that are actually in danger of closing because so many students have been put out of school because their loans have been canceled in the middle of the semester. So I wanted to know how wide that issue was.
Well, I will say this much, right? So I went to an HBCU. I went to, hey, Tiffany. My name is Darius. I'm with the UC Student Association. We're a part of the United States Student Association. And I went to an HBCU though in Alabama A&M University. And you know, this is a new phenomenon, right? The canceling of the debts and campuses. The HBCUs always had their own different kind of issues. Because also for a large portion of HBCUs, it's always been cheaper to go to school. Like I started school in 1998, I'm very old. I started college in 1998. And my tuition for a semester was $966. I remember that number burned into my brain. That is what my tuition was for virtually all of my years in school. And so we have different problems. So a lot of HBCUs are cheaper than a lot of these bigger state schools. But you know, the real issue I think that needs to be addressed when we talk about HBCUs and financing them, making sure students have the resources and the funds they need, is that HBCU students, like I was, we were led down these paths of taking out massive debts.
Well, because most HBCUs don't have access to the grants. I mean,
exactly.
A big percentage, if not all of the students, are on financial aid.
Exactly, and then the students that go and the counselors would give us false information. A personal story really quick. My first year, they said, you need to take out this amount of money because you need to live. I didn't know what to do, and my mom has no background in education and this stuff. And I applied for my FAFSA myself. I said, Mom, you got your taxes? She was like, yeah, I did my taxes. Can I have those documents? I need to fill out my FAFSA. I did it all myself, like with no help from any adults or my parents. And so when I got to school, the adult said, you need this money. This is what you need to live and survive, so take out this cash. I took it all out. My sophomore year, the first thing I get to school, I'm like, okay, I'm doing my financial aid. I'm going to get a little refund check that'll help me, live my life in college. And I go in my financial aid advisor tells me, oh, you took out too much money last year. I was like, but you told me to take that out. Like, you did this to me. And she was like, well, you have enough to cover your finances, but you have nothing else. I was broke and starving for almost my entire sophomore year because they told me to take out money that I wasn't supposed to take out. Right. And that then they had to literally pay that back from my sophomore year, the amount I was granted. So HBCUs have a lot of problems with, in terms of that financial aid and bridging that gap, because a lot of my friends that went to not the traditional, quote unquote, white schools, didn't have those same similar problems. People weren't giving them as much false information or wrong information as my neighbors.
Thank you.
Yes.
I actually have a question from Twitter from Robert Applebaum, a student debt crisis. And let me just get to that real quick. So he wants to know, how can we convince conservatives that this is not a progressive issue? Can we use language like referring to student loan debt as a tax?
I think one of the ways is to show that pocketbook impact that Scott was talking about with that data. You know, I don't want to stereotype, but you know, realtors seem to be a relatively conservative profession to me. But going and showing in these rural districts that the impact of this debt crisis is taking its toll on home purchases, taking its toll on car purchases. This is the business community, right? We need to talk to the business community about that and show that impact that this isn't just a bunch of kids worried about paying back their loans, but it spills out to the broader thing. And there's the business impact there is huge. That's the way to start talking about it, that I think.
So it is 2:30 or 2:29, and I know many folks have other things. I'm happy, and if whoever else wants to stick around and continue the conversation, we can, but whoever else needs to head out the door at this moment, it is 2:30. And then one quick thing before everybody leaves. Actually, student debt crisis, and we've been chatting about... Oh, I took you 45. Oh, well then, never mind. Thank you. I'm trying to be overly conscious of people's time here. All right, well, let's keep it going then. You've had your hands up for a while, so sorry about not getting back over to you.
Oh, no problem.
Yeah.
So I went to school in Canada, and I ended up president of my student union and chair of the provincial lobby group and on the board of the national lobby organization, which was weird as an American. But we had some successes, and the biggest difference was the institutions of student unions and student associations. So we had millions of dollars, we ran businesses, we had buildings, we had full-time staff, we had institutional memory, we had built legislative and political power, and that's the real difference that I don't see in this country. So what can we do, people that are no longer in school, to help build those institutions, those associations, those student lobby groups, to mobilize what is a huge and should be a powerful constituency, and is together in these places where they can be mobilized. What can we do to help build those organizations like yours?
Give them money. Amen. Hallelujah. Amen. Yes, give them money. Give us money. Yes. Part two is for Canada, like the actual. So for those who aren't familiar, and this is a long conversation, so I can answer a lot of these things afterwards. I'd like to get your contact information. So students pay a fee, basically, or tax themselves $7 or maybe like $5. With USSA, it's 25 cents. And they basically pay that amount of money per person per year to the student organization that funds the operations for the year. So what was your name again? Mike. So some of the things that Mike was referencing was full-time staff who are usually students who do the organizing, like myself, and then being able to pay for paint and markers and pens and a website and simple things like that. And for people who have healthcare and good things who are staff also. Part of keeping those institutions that we have currently alive, like those student associations, is protecting them because they're being attacked right now. When we turn out a lot of students to register to vote in 10 states and had a 27% increase, people saw that as a big scare tactic and it purposely put voter ID suppression bills in states that we were currently in, and then didn't fund those, and then we didn't get funding for our programs in those states to do really, really awesome and amazing good work. We did awesome and amazing good work. But we're worried about the fluctuality of that, right? When people start to pass legislation or Board of Regents or the Goldwater Institute, yes, I said it, look them up. They also, fund and find students to talk poorly about student associations, and then legislation comes out so that third-party lobbying organizations that are student-run, student-led aren't able to receive that funding. In Canada, they're allowed to join. There's no legislation saying that they can't. Everything is opt-out, so if you want your $2 funky back, you can have your $2 funky back. And you can go online and get that mailed to you. Canada's budget is $4 million. Mine's is a little over $1. And so it's a different strategy, right? And we also have a lot more students that we cater to. Canada has 66,000 students. We have 4 million. So, and we're also in a lot of other states. It's different. Building those requires people who have graduated college already to go back and do the organizing on the ground to build those student associations, and it doesn't take a lot. We've built 3 student associations in less than 2 years: Arizona, New Jersey, and Connecticut. And we've been able to get those off the ground. They have student government bodies that operate, they have bylaws, they're becoming 501c3s, like, we are building those. But it doesn't help when we're getting attacked, and it doesn't help when we don't have enough people power. So that's how we can do that, is continue to build those associations. Again, it's not just around students, because this is a larger issue, right, student loan debt, but the power and the people who are able to take the risk are young people like us. And so if we're gonna be able to do that, we have to build strong student associations. That's some of the ways to do it. More information on our website, and come talk to me afterwards. Thanks.